let me just start the things. And our this video is also available on our WhatsApp group and our other channels also. So just to give a brief info about our body. So I am Dr. Rakesh Agrawal, Secretary General Risk Management Association of India. So basically the role of this body is to create a platform for research development on risk management and allied areas. So this body is governed by governing council members. Then we have RMAI experts. And basically the idea was to engage and collaborate with professionals. And we do a lot of other initiatives also. It includes online courses on risk management, webinars, seminars, and we also publish a quarterly bulletin for our members. And we also engage with other similar bodies all over the world, and as a association partner or as a technical partner, and help to promote risk management in over the region. So just to give a brief intro about the topic, in this complex landscape of supply chain management, the inherent risks can profoundly impact business operations and profitability. So the supply chain risk can encompasses a range of factors, including suppliers disruption, demand fluctuations, geopolitical tensions, and unforeseen logical challenges. So in fact, in COVID, we have seen the challenges faced by different countries. So in today's webinar, we shall discuss the supply chain management risks and help to explore some strategies to identify, evaluate, and proactively manage potential disruptions. So for today's sessions, our speaker is Mr. Ramesh Doraiswami. Just a brief intro about him, and after that, I will hand over the session to him. Mr. Ramesh is a business leader with 35 years of experience with successful PL management, transformational and functional leadership experience of 36 years. Mr. Ramesh's career experience is rich and diverse, having worked with Fortune 100 global corporations such as Unilever, Johnson & Johnson, and also as CEO of Indian companies, VBF India Limited and NBHC. He has proven performance in 5 large industry verticals spanning B2B, B2C, and product services. An alumnus of Indian Institute of Management, Ahmedabad, Mr. Ramesh is also a cost accountant by qualification. After successful leadership experience in finance and supply chain functional domains, Mr. Ramesh graduated to general management as CEO for the past 10 years. So his diverse profile has provided him rich experience and of risk management in business, especially in the domain of supply chain and operations. So I'd like to hand over the session to Mr. Ramesh, and post the session, we will have a 10 minutes question and answer session. So you can ask questions, if any, at the end of the session. Okay, over to you, Mr. Ramesh. You can just share the screen and we can start. I'll just stop the sharing.
Thank you, Dr. Agrawal, and welcome everyone to this webinar on understanding and managing risks in supply chain. I hope all of you can hear me clearly.
Yes, sir.
Okay, thank you, Mr. Sridhar. Actually, the reason I called it a practitioner's perspective is because risk management, I believe, is not exactly a science. It's a little bit of an art. It's beyond science, and a lot of the art is actually coming out of practical experiences, and not all experiences. And I think a lot of the risk management evolution is through experience, and what one experiences. Unfortunately, sometimes negative. But over a period of time, we have all learned how to be a little proactive about it. So that's why I would focus more on my experience as a as a practitioner of risk management in the supply chain. Um, Again, I've used a structure because nothing works without a proper structure and a governance, in my opinion. But a lot of it can be adapted and possibly perfected for your individual situation for each organization or industry you are all a part of. So I have a few slides, about maybe 16, 17 slides. I'll run through them, and please hold on to questions so that we finish on time. I'll ensure that we finish well within, possibly I'll take 45 minutes to an hour on the presentation, and then we will go on to taking your questions. Yeah. Um, just to give you a brief snapshot of what a supply chain is, all of you possibly are aware about it. It's basically the set of processes which are connecting vendors with customers, and the connection can be for either a product or a service. And typically, the sub functions or sub areas in supply chain are plan, source, make, and deliver. And the make can either be inside the organization or outside the organization. And this goes beyond product. It includes service as well. I would like to cover that as well. And a very crucial part of supply chain management is around information, because a lot of the supply chain processes, each of them works a lot, and increasingly with the digitized era, which I'll also talk about, information is becoming crucial for efficiency in supply chain. There is a famous quote which I would like to use here of Martin Christopher, and this is perfectly true, and it was never more true than the time during COVID or post-COVID, when companies realized how vital supply chain was. It was always considered a core function, very resource intensive. Most organizations, if you see from a resource perspective, supply chain will possibly be the dominant function, but the impact and importance of it was felt ever so more during and after the pandemic. And so this saying is that today supply chains compete and not companies. So businesses are there, but a lot of importance on the impact of business performance is from the performance of the supply chain. So this is just to give you a broad scope of what supply chain means. Many of you will possibly know it. I will basically talk about three aspects. I'll give you a general, my understanding of why I think risk management in supply chain is important. I'll stick to supply chain largely because risk management is such a wide area, and many of you are possibly bigger experts at it than I am. I'll talk about why risk is important to be managed in supply chain, what are, in my opinion, a few means of doing it, and I'll share a brief case study of the organization where I was part of, NBHC. I see Abhay Dandavate is on the call. He's our Chief Risk Officer. So he'll be able to speak also more about it than I can. I'll talk about how we actually managed operational risks, which is a very important element of supply chain as well, as a short case study. Why is risk management important? I think the fundamental premise of supply chains today are two things. One is supply chain has become very, very global. I think very few supply chains are localized today. Most supply chains in some element, whether it is sourcing or manufacturing or distribution, is becoming more and more global. And as the geography widens, it is likely our understanding or individual business understanding of risk associated with being in a geography gets higher and higher. And there is a new phenomenon also which I have called out here, which is traditionally the East has been in the last 20, 30 years feeding the West. A lot of Chinese products, Indian and Southeast Asian products travel to the Western world, and it has been seen as a global supply chain. But suddenly in the last 3-4 years, the growth in the East has started challenging some of these situations, and increasingly there is a much bigger global balance which is emerging, which needs to be taken cognizance of. The second equally important aspect is supply chain is become very, very collaborative. Gone are the days when a factory head, I've lived an era where factories almost used to be insular, but those days are gone now. There has to be a supply chain, whether it is any element of supply chain or even business, is become very collaborative and a lot of interdependencies, not just internal to the organization, but also external. Okay, there is so much of interdependencies which are there. And when there are interdependencies, one of the key and partners with whom you are working with outside your organization may be a team, it can be a company, it can be an industry. When there are more dependencies on your partners, the the risk also tends to increase because you're dependent on somebody who's outside your immediate scope. Okay, so these two are underpinning the need for effective risk management in the supply chain, given the size and impact supply chains have on businesses. You all have heard about this expression of VUCA world. Without getting into the jargon, I think it is true. And I'll talk about it with an example. The volatility, the uncertainty, the complexity, and the ambiguity of the business world today is increasing day by day, and it is very, very important that we as business leaders are cognizant of this changing world and proactively plan, because we can't eliminate risk. I don't believe risk can be eliminated, but it can be managed. And manage means it can be minimized, it can be prevented, it can be, your reaction can be much faster, impact can be reduced, and so on and so forth. Okay. The fourth important factor is geopolitical risks, and you have seen it happening all the time. There are trade policy embargoes which come. Recently, there has been war. There has been wars even in the past. So geopolitical risks, and in a context of a global supply chain, the risk of non-performance or poor customer service is a very big risk businesses are exposed to today. And last but not least is climate change. Okay, especially for a lot of, meaning it doesn't depend on whether the industry is a food industry or not. Climate is, meaning today, and I'll show you in my example itself, you would not hardly believe semiconductor is an industry which should be affected by climate change, but it was. Yeah. So each of these elements is something which is having profound effect and seemingly outside the control of an individual organization. And that is where the beauty and science and art of risk management and the importance of it comes, because an organization which not only, meaning runs its business efficiently, but is also able to sustain it through good risk management practices are the ones which win in the long run. Yeah. So risk management basically helps us identify vulnerabilities before they strike. Yeah. So it helps you proactively manage risk, prevent it in many cases, and if you can't prevent it, it helps you manage it with limited impact. So it's extremely important for leaders, whether it's business leaders and supply chain leaders, to use risk management effectively and make it a source of competitive advantage. And this example, see, because there is nothing, no truth comes to life unless we back it with evidence, and we are all professionals. We look for evidence all the time. So I have picked up. There are many examples you can recall. Each of you, with your experience, will recall. But I wanted to pick this one, which is the auto industry, particularly was affected. And a lot of us would have read about it in the paper. Some of us who have gone and booked cars would have seen that the waiting period has gone up. The prices have gone up of automobiles in the last 3 or 4 years. What was the reason for it? The reason for it was basically there was an acute semiconductor shortage, which emerged in 2020. Yeah, it emerged in a silent form, but then had an effect for over 3 years on the industry, and we are still coming out of it. Okay. And why do I call it a perfect storm? It's a perfect storm because none of the factors were really correlated, which contributed to the continuing impact on the shortage. So these seemingly were were independent factors, but all of them were contributing in some way to the shortage over the 3-year period between 2020 to 22. So that's why I call it a perfect storm, when unrelated factors come together, almost conspire to create a serious risk, because then it's not a question of just handling one element, then something else happens, and you'll see evidence when I speak about it. So what is the context as far as the semiconductor market is concerned? Meaning, we were in a global world. The global world required efficiencies and competencies. So contextually, Taiwan was manufacturing 60% of the semiconductors the world required. So one tiny country in the east corner of the world is a manufacturer of 60% of semiconductors. And many of the advanced semiconductors, because they had achieved a skill level of a very high order, 90% of the supplies were actually coming from Taiwan. So, and this is happening for years, you know. So there would have been great guys who are sitting and doing logistics. People like me would have spent a lot of time trying to optimize supply chains and stuff like that. But this was the end result of that game, where there was such a concentration of sourcing, and nobody realized, because it was the reliability of the Taiwan manufacturing system, both in terms of quality and supply, was very good. And coincidentally, over a period of time, semiconductors, after starting off as to have a usage in technology-based computers and stuff like that, had started going across industries where, and at last count, 169 industries were using semiconductors. And many of them were industries which were growing phenomenally in the last 3 or 4 years. So there was the context which was developing. Then what happened in 2020, we all know the pandemic hit us. There were shutdowns and lockdowns all over the world. There was disruption in logistics. Two things happened. There were disruptions in logistics, and container movement from the east to the west stopped. From the west to the east, containers which were stuck, which had gone to the Western world, were stuck there, and they could not come back. And similarly, there could not be any movement for a period of 3 to 4 weeks. But at the same time, the digital, everyone thought that the next few years we will have to live a world of digital commerce. Okay, and so obviously offline working, offline commerce, everything increased, which automatically led to an increase in PC demand. Okay, so the pandemic resulted in disruption on the supply side and demand increase on the other side, seemingly discrete but contributed by a single element. Then sometime in 2020, maybe coming out of the result of all the confabulations which were going on between US and China, there was a trade war which erupted between China and the US. And the US companies started putting restriction on Chinese supplies, talking about we need to create alternate sourcing, etc., etc. Okay, so there was a kind of a Cold War, and there was the trade embargo which was which had started happening. And Taiwan, as you know, is part of the political Republic of China. Yeah, so that had its own consequences in terms of the ability of product to move from Taiwan outside. Same time in 2021, as e-commerce became popular, the cryptocurrency, and all of us remember this, the cryptocurrency demand soared, and cryptocurrency mining requires PC chips. They require specialized computers which require advanced semiconductors, and that created, as the demand was such a big surge because of the crypto demand and its need at that point of time, that all other applications like automobiles and computers, etc., tended to lose attention because they couldn't pay what these guys were willing to pay. So we had suddenly a situation of demand surge. The summer of 2021 brought a drought in Taiwan. This is what I called out as climate change. There was a drought in China, and pure water, ultra pure water, is required for production of chips. And since it was short, obviously industry tended to suffer, and the production levels came down as well. And to add to all this, the geopolitical situation came live when Russia invaded Ukraine in 2022 April. And coincidentally, while 60% of the world semiconductors were being manufactured in Taiwan, 50% of the neon, which is a key raw material for semiconductors, was being supplied from Ukraine. So you just see the complexity of how it was happening. Suddenly you had the West and East. The West was largely the demand source, but also the supplier of a key raw material, and that got impacted because of the war. So you can see this is what I meant by the perfect storm. So you can see an evidence the pandemic was a health in a scenario. The trade war was a policy matter, was an international policy matter. It had the rise in demand of cryptocurrency and computers in general was a market development. It was a general market development which you would consider to be good, but sometimes when it happens sharply and very dynamically, it becomes difficult for us to respond. The drought, the water shortage was a natural event, was a climate change event. And last but not least, geopolitics contributed to the problem in the neon supplies. So all this took that's why even though it is a global supply chain and semiconductors, you can imagine, are not very volume intensive to carry around the world. You can even ship it by air if you want to. But the fact that these multiple factors coincided in the similar period resulted in a cascading effect, which then took a long time. And if you see, meaning from an Indian perspective, there was an 18% decline in the volume of cars produced or sold. And the Indian industry, just as an example, had over 15 lakh vehicles backlog, which is quite a large backlog given the fact that this sector is a fairly significant sector in India. There was, of course, permanent cost increases which have happened, and the lead times have increased to 14 weeks from the average of 3 to 4 weeks. So you can see that what seemingly I've captured, of course, a recent event, seemingly more complex, but events like this happen maybe not as diverse and complex, but each of us who are sitting in our business environment would have experienced very many situations where more than one factor actually contributes, and then we are struggling to find a solution for it. So I'm just trying to emphasize that this is like, and you're all risk management professionals, I'm sure most of you. So to teach you the importance of insurance, I always say this to myself and to my team when I've worked, that insurance is such a thing that you only realize its importance when you have a mishap. So risk management is also one such. So you invest behind risk management and risk management practices to avoid and prevent the impact of a large catastrophe. So if you ignore that, you would end up actually suffering. And those companies which manage this smartly are the ones which would have got competitive advantage in any such crisis. And you would all have experienced it in your respective businesses. So this is just to underline the importance of risk management and the need to give it importance. I've tried to capture a general slide on what can go wrong in each of the areas. I'll only touch on a few of them. You can read through, and you're all good, solid professionals. I don't want to run through each one. A few of them, like if you see under the plan section, you have something called poor demand forecast. Okay. If you can't plan, if a business doesn't understand its demand from a 2 to 3 month perspective, okay, it tends to then create either a crisis of inventory, excess inventory, or shortage. So it's very important as a process that how good your demand forecasting process is, how much of risk is there is built into it for it to actually sense changes which are there, like the e-commerce demand was always being talked about, but obviously nobody sensed it. So things like that, I think, is one risk area. Commodity market risk, I have spoken. A concentration of sourcing. I mentioned the Taiwan example. You will see many examples of this in business, because we are trying to optimize all the time, because our businesses are pressured for costs. So we either concentrate, and concentration is not just around physical sourcing. Sometimes we concentrate all activities in one individual partner in a service organization. And if the partner has a problem, then it becomes your problem. Or it could be a geography, or it could be a location which is immobilized because of strife or stuff like that. So concentration itself has a big risk attached to it. And last but not least, in the information world, data security and data breakdown is becoming a very, very important area of risk. And that since supply chain is dependent enormously on information, and the exposure of on information security because of the external orientation of supply chain is also very high. So the risk of data breach and the data breakdown is much higher in supply chain than many other functions, and hence the proper management of it is absolutely important. So you can read through it and many of you will know, but I've just given you a checklist of possible areas where risk can come in each of the sub areas of supply chain. Now, having spent some time, I believe I've brought to you at least the importance of why risk management in supply chain is important. Okay, and I'm happy to take questions later on, any specific questions or some things which I have missed out. I thought I'll also spend a few minutes on what could be, in my opinion, certain approaches, and I've borrowed from literature, and I have also overlaid it with my personal experience in different organizations where I've worked. Yeah. Now, when you come to risk management, the first and most important aspect one needs to understand is risk. Many of us tend to look at risk and risk management as, oh, that will be done by the compliance or the risk officer who's sitting there or the CFO of the company. In reality, if risk management, and meaning if you just go back and think about the semiconductor shortage, I don't know, with due respects, I am a finance professional myself as a functional person, but I don't think any finance person or any one person could have sensed what could go wrong. Meaning, it's largely a collaborative effort which should have helped an organization manage it. So it is very important for all of us to understand that risk management, and this doesn't, and especially in supply chain, which I had emphasized to you as a collaborative function, risk management there is an enterprise function. It is not the preserve of anyone. However, it has to be led. So typically an organization will have three layers of defense or risk protection, in my opinion. The first layer is, of course, the business line, the people who are running the business. And this doesn't mean only supply chain. Again, it could be the marketing person, the sales people, the finance people, the manufacturing people. They all are managing risk through their own internal processes. That is the layer one. Then there is leadership, which is performed by an independent risk management function. Yeah, that leadership is the one which will seek out with the business teams what are the risks which are in the business, and I'll talk about it more when we speak about the approaches. And last but not least is, how do you know? You may have understood your risk, you may have planned some risk mitigation process, but how do you ensure that two things? One is it is updated, which means you are building scenarios and seeing whether the current risk management mitigants are sufficient or not, and importantly also checking it out, which is what I've called stress testing here, by audit, which is again an independent function. They are specialists who will come and they do it, and some of this can be done externally or it can be internally. So this is how, from an organizational perspective, before I get into the specific methodologies, how I believe an organization should approach it. So it is not, first of all, not the preserve of anyone, but it's the speciality, or it needs some speciality leadership, and the leadership can be different for different kinds of organization. Obviously, a bank will require a very serious and strong risk management function, because every proposal of an individual borrower or depositor can have it, or a investment can have a different kind of risk. Maybe a a company which is in a light services environment may have a different kind of risk profile, and hence maybe the CFO or someone having suitable authority working under him, empowered, can manage it well. So that is a choice one can make, but it still requires focused leadership, whether it is independent or whether it is part of a single function, can be individual organizational choice. And it requires to be stress tested by somebody outside. So these are important points I would like to leave you with. Before I go to the approaches, when you look at approaches, I really wanted to talk. There are two kinds of um, risks um, I've tried to call out here. One is what we call known risks. Okay, these known risks, all risks come suddenly, but some of them you can see uh, could have been predicted because they are internal to our business. Okay, it could be a failure of some part of the business, which is thing. So it could be predicted and managed. So there are two elements of known risks. They are largely internal, and they are also to that extent more predictable. Yeah, and some examples I have given: quality failure, demand forecasting weaknesses, production challenges, supplier concentration. When you know that the suppliers are all in one location, or one supplier is supplying 60% of my components. So all these are evident in our own process. So these I qualify as known risks, and I have suggested a certain approach for it. Unknown risks are those which are external, and you can see those are obviously the macro factors which are beyond the organization. It could come from regulation, it could come from climate, it could come from geopolitics. So it is usually external, and to that extent is less predictable. And so the approach there could be, you still need an approach for it, in my opinion, but that approach may be slightly different, and I'll call it out when I discuss each section. Starting with known risks. Known risks, in my opinion, are better managed through a more structured and process-driven risk assessment document. Okay, so if one prepares a good risk assessment document of all business processes which are internal to the organization, structure it through a proper governance mechanism, it can be, a lot of the risk can be identified and proactively managed. Okay, because by nature, you know more about these risks. And if you study them more through a good process of risk assessment, the understanding is that we will be able to identify and mitigate them before they happen to us. Okay, so there are 4 key steps. The first is one has to identify and document the risk. You have to develop a risk management framework, and I'll showcase a risk management framework of Gartner to you, where this is what the risk is identified, what is the likelihood of it, what is the impact, and then the score, and based on that, the risk mitigant is identified. Now, once you have identified the risks, you have quantified its impact, it doesn't stop there. You need to, a good risk management approach will also ensure 2 things. One is there is an active measurement and monitoring of it within the organization, within the business, within the function. Okay, if it is, say, procurement head is monitoring it and measuring it on a periodic basis. Okay, I have suggested once in 6 months. Again, it's contextual to the organization. More importantly, the board should be looking at it at least once a year. Yeah, and having an action plan on those areas which are high impact areas. Okay, so this is a board function to some extent, risk management, and it's important each of us sell this value to the board. Now, I've given a scorecard for procurement, okay, which is a common area which people talk about. As I said, this is just a template. I have added factors on the template based on a certain specific material, a certain set of factors which are relevant to that material. Okay, each of you, when you go and practice this, would need to do it in your own way. I think the the columns may be the same, but any of the rows can be very different. And obviously the measurement and the assessment would be very contextual to your organization. So here you can see we have divided for a particular material. What are those 4 or 5 things one would look at to identify? One is, what are the key industry factors? Okay, what is the supply chain? What are the, you table the risks which are likely from an industry perspective. What are the risks? One is there can be a sudden change in supply demand, where supply becomes tight or demand becomes stronger, and that can result in tightening. What are the risks associated with it? Is it a low probability or a high probability? So your procurement head should sit and understand, look, in this material, does he expect the risk to be high or low? Okay. And similarly, for number of suppliers, if there are more suppliers, obviously the risk is less. If there are less suppliers which are qualified, the risk is more. What is the barrier of entry to entry for a new supplier? Is it a very capital intensive product? Is there government regulation around it? Okay, so if there are high regulations around it, if there is, so obviously a new player to put up a factory or a supply source would end up being very difficult. So the risk is very high. So when I say 5, then it is almost a case of it may take 2 to 3 years for a new supplier to come into the market. So these are some of the industry factors. Similarly, individual supplier, you look at each supplier, what is his or her performance history? Are they having, how many disruptions have they had? What is their financial strength? What is the strength of our own relationship with them? Which means how good is our equation and supply relationships with these suppliers? Okay, so again, assess each of them. Okay, sourcing profile. Is there patent restriction on product? Okay, this material, is it governed by patent? Okay, many materials, as you know, are governed by patent, especially in the technical, in high-tech industry. So you need to take that into account. Concentration, which we have spoken enough about. How long does it take for alternate supplier development? Similarly, supply chain, the length of the supply chain from the time the supplier, you place the order to the component or material coming, how much time does it take? Obviously, if it is longer, it is subject to more risk. Okay, what is the lead time of our suppliers to our supplier? It's not only our lead time, but also the lead time of how long it will take. Like we just spoke about the example, if neon supplies are not coming to in Taiwan, there is no way how long it takes for Taiwan to supply may be irrelevant. Okay, so the idea is to list down all the factors which could affect the supply of this material and give a probability, and then as a CPO or a business head, one has to put what is the impact each of these factors would have, and then put a weighted rating. Obviously a 0.8 score means 0.8 on 1 means it's a very, very risky material relatively. So then the business and the functional teams start working out what could be the mitigants for the key areas. Like as you can see here, the single biggest item is the fact that there is a problem in creating new suppliers. Okay, because it takes time, there are restrictions and so on and so forth, and qualification. So the business should make a concerted effort to actually start workings on strategic supplier development. As an example, I'm saying in this particular case, and that is a good risk mitigant. Yeah. So this is a little more of a recommendation. There's no science. Again, this is just a structure. The quality of risk management would be a function of how good are the individual elements you identify, and how good is your assessment of the probability of it happening. Now, moving on to unknown risks. Okay, now unknown risks, the approach cannot be as structured as I had already explained to you. There has to be a structure around it, if at all there is, but it is a little more loosely defined, and it's a lot more qualitative than what it is for the kind of risks which are internal to an organization. So because it involves the environment, and a very important element associated with the unknown risks is the ability of the organization to communicate with transparency, not just within but also outside. So how quickly are you getting feedback from your partners? How quickly is your, how transparent and open is the, because normally the front line, whether it is your sales team or whether it is your procurement person, he or she is the first person who hears the news. And if they keep it to themselves and they don't share it because they think it is unimportant or because they don't have time or you don't have time, then you possibly are missing something which is very important. So communication within and outside the organization needs to be quite efficient for this, for unknown risk to be better managed. And obviously you need to have strong layers of defense. Like a good example is authority limits. Okay, the very fact that if you commodity exposures, for instance, are exposed to unknown risk, if you have authority limits within the organization, then there will be questions asked when somebody is actually exposing the organization to a particular supplier or a particular material or a particular price. So that itself becomes a layer of defense. And last but not the least is, I think it's very important that awareness is created. Risk is not a negative thing. It's positive if it can be managed well. So awareness of people to risk and the importance of risk management. And that's why I borrowed these terms: acknowledge the need to manage risk, be transparent about it, respond to it, and respect it. Don't punish it. Okay, very often somebody who brings the bad message is the one who is always faulted because he or she has maybe is managing that area. But the problem is deeper because we have not created sufficient awareness or created proper structures. So on unknown risks, it is very much an art, and it requires more initiative, more creativity, and a lot of behavioral aspects come into it. Like I said, the piece around how do you ensure that people acknowledge and are more communicative about it and respect and respond to it. But still, I've just, in the same case of procurement of a material, because I've chosen it for the structured one, I've used it even for the unstructured one. Now, this is again an example of a prototype. There's no hard and fact structure around it. Each of us will have to make it the way it is. I've made it for a defined situation. But I would like to point out a few things which are unique to the management of this, which you will see in these slides. Okay. The first is here, while in the first instance, in the known risk, you'll see a lot of the structure is internal to one function or one department. Largely, I'm saying, if it is material, the procurement people are can complete that entire grid. Whereas here, it is a collaborative process. You'll see the need for information not only from within your organization, but also outside, within your organization, multiple functions, etc. Okay, you see the last column. As you go for each of these sub-processes, you will see suddenly from procurement, you're gone to a stage where for integration and digitization and risk management, you need to involve your suppliers and the business team as well, because there would be implications of some of the actions which you are proposing. Okay, so it is very important for us to recognize that managing unknown risks is a collaborative and a enterprise. It is much more an enterprise and a cross-enterprise approach. The second is, you'll see that there is an element or there's a great element of strategy in managing unknown risks. If you have to manage unknown risks, a lot of the actions become strategic, and that's why you involve people in the business much more, because they suffer the consequence of some of these actions, and hence involving them and making this a strategy, a part of your business strategy itself, becomes extremely important. And because it is so strategic, it is so impactful, and it can cost resources, it is also important to prioritize. You cannot, in managing unknown risks, you cannot take a laundry list of risks and manage it. You have to prioritize them, tier them into what is strategic, what is critical, what is transactional, and only pick up possibly the strategic pieces, and if you are lucky, some critical pieces before you on which you will have to work on. So it's absolutely important for you to prioritize. So that's another element of difference. And the last is the integration with the of the mitigants into the business process, which is what I spoke about. If you see the integration into the sourcing process, and then you'll see there is a need for a lot of the risk management actions to be integrated. Let me take this particular example. Now that I've captured the broader theme, you'll start for the same material category. If you were to do this, you will start from categorizing the suppliers. You will not do this for every supplier. You will categorize the supplier. Some suppliers you will call strategic, which means the material category which is there, your interaction with the suppliers is very strategic, which means he is a dominant part of your supply chain, or he is critical to your supply chain, which means that if there is a miss by him, it can be a miss by you. The third, it can be a transaction, which means it can be a supplier of stationery to your organization. It's transactional. There's risk there as well, but you would not deal with it because it is not mission critical. Now, then you will pick up the strategic and critical pieces particularly and study their markets for various elements. Okay, and this will be a mix of internal and external research, and a lot of what you have done in the structured approach will help you here. Okay, then is the prioritization, where you start having discussions. So you'll then have a little more open conversations with your suppliers and try to see how you can reduce the number of, the idea is, can we make all suppliers transactional? You can't. You will have some who are strategic and critical, but a good risk management process will push less of your supply chain towards critical and more of your supply chain towards critical and transactional, and keep only a select few as strategic. And for those select few, you will have to also make your procurement process more contractual. See, for instance, in a transactional supplier, you may just give him a quarterly call off or even a monthly call off. Okay, whereas for a strategic supplier, you may have to give him a multi-year contract. You may have to give him exposure to your own supply chain. So the nature of your relationship with a strategic or critical supplier could be very different from that of a transactional supplier. And that's how you ensure. And the idea is, when you have more strategic suppliers, they'll communicate these risks better. You will be more aware about possible risks. And more importantly, when the risks do emerge, you will have these suppliers backing you because you have backed them through longer term commitments. So that's why this integration is very important for the management. Now, and in a real evolved world, the information transparency between your strategic suppliers, whether it is tactical or whether it is strategic, will be a lot more transparent. They will almost be part of your own organization for your risk management to be as effective, because that communication from them needs to come to you and from you needs to go to them. Yeah. So you can see this will be a lot more qualitative, lot more notes, but will result in more high impact business level actions than what possibly your internal risk will call for. Okay. So these are a few examples and approaches which I've shared. The structure is something which is available, as I said, but a lot of the structure is, the science is around the structure. The art is around how individually we understand our business and our risks in these businesses, how we communicate, how we internalize this, how we involve people in the organization and ensure that the quality of the process is much better rather than just having some boxes and ticking them. Now, so this is what I wanted to cover in terms of the perspective on how to identify risks and manage them, which are not on a daily basis. Okay, but there is equally an important area of risk management, which all of us spend a lot of waking hours on in business, which is around managing operational day-to-day risks. And supply chain is a very, very operational function, as all of you know. Meaning you cannot say I'll make a strategy and forget it. Every day morning, is your supply reached the your customer? Is there a miss? Is your manufacturing, is your factory having, has it met its production plan? Everything becomes very, very important. And hence, operational management is a very, very important element. And here, I think increasingly organizations are finding smart ways of managing this through digitization. Yeah. Now, I just I'll, as a prelude to sharing the example of NBHC, this slide captures what are the operational risks I'm talking about. Operational risks are basically service failures, control lapses, okay, which happen. Information asymmetry. Information asymmetry is when, meaning one person is sharing information but is sharing it in a way in which the other person doesn't understand or cannot use the information effectively. Okay. A classical example would be in the area of the factory getting a production plan, or the manufacturing and the sales plan, and what is given is possibly the numbers are right, but it doesn't capture the market developments, and hence the factory is prioritizing the wrong SKU. Yeah. So this is what I call information asymmetry. And last but not least is fraud, which is where there is a willful a violation. Now, each of these areas are well addressed through digitization. Yeah. And digitization helps not only manage the risk, but also improves efficiency. Number one, it helps transparency. Yeah. It helps agility of information, which means the information doesn't sit in my box. It is available to be shared real time across the organization. So anybody who has the use for that information can use it, and hence to that extent it doesn't become the preserve of somebody having it in their notebook. Okay. Third, and importantly, and that you'll see in the example of NBHC, there are automatic checks and balances which you can build in to prevent any failure. And you can create even alerts to see if a failure were to happen or near failure is there, how you can alert the senior management or the middle management in the organization to take action. Okay, so both it helps because the computer just does things repetitively and doesn't rely on any individual. And that's the last point. The gaps are minimal because the human error or fatigue is minimized. Okay, and this is exactly what we tried to do over the last 3-4 years or 5 years. It's been a long journey in NBHC, and I really wanted to showcase this study largely because the agri-logistics, meaning NBHC, just to give you an idea, is a company in agri-logistics, which means we store millions of tons of food grains over 3,000 or 4,000 warehouses across the country. Yeah, they are, and these are in tier 2, tier 3 locations. Okay, not in Bombay, Delhi, Calcutta. It is most of the locations. In fact, there's hardly anything in Bombay, Delhi, Calcutta. Okay, all the warehouses and all the storage locations. At the peak, I've seen 4.5 or 3.5 million tons of food grain being managed across the country over 3,500 storage locations. So it's a wide and vast geography, okay, on which it is managed, and it's a lot of volume. Okay, and in that kind of sector, how it was very important because risk increases when you disperse. When you concentrate, all of us know the risk reduces when you disperse. But unfortunately, the production of food grain in India and the consumption is not necessarily controlled by any one company. Obviously, production of rice, basmati rice can happen only in Punjab, Haryana, at least as of now. So you cannot make it in Tamil Nadu. So that is a limitation. And because of that, you need to ensure that your capability to disperse and manage the operations becomes a source of advantage. Now, this just gives you an idea about the industry. Okay, it is highly unorganized. All of us know it, meaning 85% of this industry, possibly in 85 to 90% of the industry is unorganized, which means small traders and small warehouse owners manage a large part of the market. So companies like NBHC, which are professionally managed, have only 10 to 15% of the market. Okay, so we have to compete with with the single individual landlord and stuff like that when we do business. Okay, who are able to manage it through their own physical surveillance. Okay, they are not running warehouses all over India. They are managing it in their location, so it's much easier for them. Secondly, it's dealing at the bottom of the pyramid. Bottom of the pyramid doesn't just mean a tier 2, tier 3 location. No, the kind of resources we have in those locations are not the resources. You will not get a PhD there or even a graduate to manage our warehouse. Many of our warehouses were being managed while we are trying to push it up to graduate level people. Still, I would imagine 50-60% of the people are not even graduates. But we have to manage because you can't get graduates to work or come and work in those kind of jobs in the locations where we want them to be, because they are to be close to the production source, farm, and all that stuff. So understanding those kind of people and managing and being able to work with them was an important challenge. Okay, and obviously very low technology penetration when we started this 5 years ago. Okay, very cost sensitive industry. Okay, so investing behind technology, etc., was a challenge, but the company took it as a challenge because we understood strategically if we manage our risk in these warehouses better, we'll be able to possibly over long term manage it more efficiently with less resources and importantly with less risk. Okay, and that's how we actually started this journey. And today we have, in this kind of market where we are dealing with food grain in tier 2, tier 3 locations, we have an entirely paperless transaction system, which means there is no written paper which moves, whether for receipt of goods or dispatch of goods or orders. Nothing happens on paper. Everything is digitized and gets communicated digitally from the head office to the field and back. So that is where we have reached, not only in terms of transaction, but also in terms of governance. I think Abhay is here on the call, maybe. I can't see now who are the people left on the call, but he manages a team which actually does the surveillance, and that surveillance is also digitized. So, and because once you put the information in a digital medium, anybody can access it, and that transparency helps specialists who are managing risk manage it better. Yeah. So what did we do? I'm just talking about a typical process. This is not exhaustive, but I didn't want to load you with too much of stuff. But in a warehouse, typically when we hire a warehouse, the first is we have to have clients who are willing to store product commodities in that warehouse. We have to approve that warehouse, whether it is from an infrastructure and process standpoint, and equally from a digital acceptability standpoint, which is the digital infra, whether it is adequate in that location. Okay, so those are the first two processes. Then the material comes, it has to be received properly, it has to be checked for quality. There's a price assessment because a lot of our customers take bank loans against that stock. So the banks require us as a storage agent to provide a fair price of the market. And the market price, as you know, changes every day for commodities, and hence a good and independent price assessment system is also important. Then ongoing inventory management, which means the product is safe both from a quality and quantity perspective, is also managed. And the last is the efficient dispatch. And each of these has sub processes. And without getting into individual processes, you can see it's the risks abound in all these areas. There are client risks because client can be having his own problems. They could be having risks associated with them. Geography can have some risk. The warehouse infra can have some risk. The receipt and documentation around it can have risks. The quality acceptance, obviously, the sampling procedure can be tinkered around with and wrong results can be obtained. We need to attach the right price to it. Inventory management on an ongoing basis can go wrong if it is not surveillance, if there is no adequate surveillance. And obviously, documentation can go wrong in case it is on dispatch as well. Last but not the least, the people who are manning these warehouses, as I said, are not exactly the most sophisticated people. Okay, to that extent, how do you manage 4,000 people to have the right integrity and understand the SOPs, make them familiar? Each of them has tablets digital tablets which are given to them, and they enter the transaction and do all the surveillance using that tablet. And so to train them on the process and on the technology was also an important challenge. But all these are the kind of risks which we were exposed to. And here I have tried to see against each of those processes, what did we digitize? Okay, on the warehouse leasing process, we simply made at the time when the warehouse is hired, okay, the field person goes, a person in Rajasthan, in Kota can go and hire warehouses. He is empowered to do it, but he needs to get the approval. And before he gets an approval, he has to fill a checklist, which is a digital checklist. And that digital checklist has a digital process flow for approval, which comes to the person in head office. And it is also, it talks about the quality of infra. It has pictures which are included in the system. He takes digital pictures and uploads it to show whether the quality of the infra is adequate. And so there are a lot, the checklist has yes and no, and any no, he has to explain why that no is acceptable and attach a risk to it. And based on that, the overall hiring of the warehouse, both from a cost and risk standpoint, is assessed by the head office team, and the approval is done digitally. Okay, so this whole process is the first part of the process which has got digitized, which reduces the risk around a person not knowing what to do in hiring a warehouse or in reporting something which he doesn't appreciate the risk in it. He knows it, but he doesn't appreciate the risk sufficiently. We bring in we are able to use the more experienced people in head office also to participate in this process digitally. Second is access control to the warehouse. By giving tablets, we not only gave tablets, but also built technology around GPS, by which we ensured that the warehouse keeper is present in the warehouse every day. Okay, so we linked his attendance marking to the presence within the parameter of a warehouse. Okay, we have made barcoded digital locks. He could only open the warehouse using digital locks, or RFID tags were used, which will ensure that the same tag which he is removing, which he is closed the warehouse with yesterday, is what he needs to show in his photograph before he opens the warehouse on the next day. So we are able to check whether any warehouse is operated unauthorized way by the warehouse keeper or somebody who is not aware. So access and participating in the warehouse operations was also being digitally done. And mind you, this is not being done in Bombay, Delhi, Calcutta. It is being done in 4,000 locations, which are tier 2, tier 3 locations all over the country. I mentioned to you every receipt, dispatch, quality parameter, the sampling, everything is monitored through use of technology, both in terms of data as well as pictures. Okay, so the whole workflow is defined, the acceptance workflow is defined, and the person enters and captures pictures of the stock which is coming in, the sample which is being taken, etc. And that then moves through the system. Yeah. Self-certification, meaning we have built in, once the stock is in the warehouse, there is a daily monitoring, including again, there is a end of day routine. It's called the EOD app, where every day at the end of the day, the warehouse keeper actually does a certification, a self-certification of the warehouse, infra, as well as the stocks individually in the warehouse. Okay, and he is allowed to call out deviations. Okay, we have encouraged, and that's the culture. We have encouraged people, and we have actually rewarded people, incentivized people to report deviations, so that the deviations can be quickly redressed. Like if a stack has fallen, because in commodities stacks tend to fall. If they have fallen, then it has to be restacked immediately for proper control. So we have encouraged them to report it and discouraged them if we find a deviation which is not reported by them, we penalize them in our incentive structure. So we have built that kind of self-evaluation and self-declaration process, which has also helped us, and then backed it with the digital surveillance and the escalation process. So through a combination of all this, today we have substantially reduced the risk of this operation from meaning having, and we monitor it on a daily basis. And obviously the idea is not to every deviation, we don't try to control the number of deviations, but we try to monitor two things. Are the deviations L1? L1 is a more serious deviation. So as you can see, the CRO and the CEO focus on the critical observations and try to ensure that those observations are quickly acted upon. Okay, so the idea is not to penalize the business for reporting. The idea is to ensure that they report fewer critical observations and ensure that they are acted upon quickly. And this is escalated, the governance is escalated right up to the board of the organization. So today, I'm saying, meaning because I only shared this case study as an example of where you can actually practice in even a tier 2 industry business, which risk management at a very operational level through digitization and technology. At the long run, in a 2 to 3 year time frame, pays for itself. It doesn't pay in 1 year, but even in our company, I think over a 2 to 3 year time frame, it has paid itself back in terms of our efficiencies and the way we could manage. So in last, I've just shared this cartoon, if I may call it. It's not cartoon, it's actually a good slide which captures risk management is all about perceiving risk, that is, don't go near, measuring it, how far you need to be, and then taking risk management and mitigants. Okay, so that is what I wanted to leave you with. I took 5 minutes more than I thought, but I am now open to questions any of you may have. Thank you.
Thank you, Mr. Ramesh, for an excellent presentation. So if any of our viewers would have any questions, you can just send us in chat box, or you can unmute yourself and you can ask.
Hello, Ramesh ji.
Yes, please.
Sir, Yogesh this side. So my question is like such a way. Actually, I have handled I am working in a credit in SCF product only. So when I have started working with this product, so at that time, like traditional supply chain was there. Whereas nowadays there is one new concept was come, digital and startup business. So there are already there is one way of working, traditional policy and everything. Nowadays companies are coming up with new products, and small fintech companies are also working on the same line. So there is a wide difference I am looking after. So I want your expert feedback or opinion or observation, means how you are looking into this, because traditional process was like entirely based on the policy, whereas nowadays every time new concept, new products are coming, so we have to align our main policy with that person, or what you can say, aggregator policy. So are you also looking into this, and what is your opinion and feedback? Thank you.
Yogesh, I'll try to answer the question, although the question is in the answer is in your question itself, I feel. See, when you talk about new products, okay, there will always be new products and new business processes which are coming in any organization. Okay. Now, your policy can either, meaning, your policies are, what are policies? It's actually a big word. It tends to give a color of bureaucracy to it, but it is basically an operational, what I call a standard operating practice, an SOP. I use the word SOP. Now, it is the best way of handling a certain business at a point of time. Okay, so it is not. It is very contextual. So if you can, and that can be either digitized or it can be on paper. Obviously, the choice of whether it is on paper or whether it is to be digitized is a function. Every company has to make that call. But for reasons I just mentioned in my presentation, Yogesh, it makes a lot more sense to digitize your process. But you cannot digitize something without knowing your process itself. Yeah. So you can only digitize. So this world of trying to say we have digitized something, as I showed in my slide, unless you know the underlying risks and underlying processes, it is your digitization can be completely wrong. Yeah. So you have to have your basic SOP right for whatever business you're doing, and you can more efficiently do it and more smartly do it if you have a digital way of doing it. But whether you can have a digital way of doing it or not is contextual to your business. Sometimes, like banking is very digitized today. So if your data is digitized, it becomes much easier for you to digitize your risk management as well. But if you're to the extent you're meaning if you're doing a physical supply chain or something like that where material is moving, you cannot do digital, all of it digitally. You need to have a physical infra as well. So each company has to decide based on the maturity, the level of digitization of its data and processes in deciding whether to digitize risk management or not. That's my take, but
Okay.
I'm happy if you had any follow up or maybe Dr. Agarwal
Yeah.
can weigh in with his expertise.
So if anybody has any other questions, meanwhile, as I was just going, listening your lecture today, so do we see a scenario where countries need to be self-sufficient in the whole manufacturing process? Because 2 months back, I was attending a session from Russia. So they had all gathered together their regulatory bodies and the industry people. So they had a big concern that post-COVID and this sanctions, most of their manufacturing things are stuck. They are not able to procure critical parts from other countries. So maybe in few industries they have manufactured something and a critical part is missing and they are not able to import it. Now they are planning to manufacture it at their end. So end of the day, the whole industry is getting affected due to it. So maybe due to the increasing geopolitical tension and all, maybe somewhere or the others, it will not be possible in all sectors, but maybe wherever possible, countries would try to minimize this risk.
Yeah, see, if you see this China plus one and all that, which is being talked about, is all one way of risk management only. Yeah,
Mhm.
it is risk managing your the supply chain. It is being given a different kind of name, but it is risk management. I think substantially companies have understood and come out of it. But again, the beauty of any risk management process, and that's why I tend to call it a science, is that you can't predict what is next coming. Yeah. So one has to be at it and hone it like many of the other things. But I think the unfortunate thing, and people like you in the RMAI should move it a little, all of us, why you alone, is just giving it the importance it deserves. I think the business owners tend to give it less importance and tend to look at it as a bureaucracy, meaning which I think is sad. Yeah, and it's only when the event happens and everybody starts asking what went wrong. I
No, no,
think there is a question. Yeah,
even post COVID also we saw that a lot of risk managers could not anticipate this sort of thing coming. So
exactly. And we'll
and
not know the
we
next one, and we will
next
not
one
know
that
the
may
next
come.
one.
So we again need to be charged up because we don't know what is again coming, and maybe this can be more deadly than this COVID.
No, I understand. There's, I think, Roland has asked a
Yeah, Mr.
question.
Roland is from Singapore. Mr. Roland, if you would like to share something. So he's a very experienced
Oh, good.
practitioner from Singapore. I met him, I think, last year.
Oh, thank you,
Yes,
Roland.
yes. Thanks for inviting me, and it's a privilege to hear from you, Mr. Ramesh. Yeah, my question is in ERM enterprise risk management. It's the overarching, integrating, as well as holistic risk management, how can we fit or align supply chain risk management as part of enterprise risk management?
Yeah, I'll answer this question in two parts, Roland. Thanks for bringing this up. I'll answer it in two parts. As far as operational risks is concerned, I gave you a live case of how operational risks could be managed by integrating with one's ERM. ERM meaning ERP, I guess you're referring to. Yeah. So in the example which we have talked about, all of what I have shown to you is part of our ERM. Okay. So that is as far as operational risk is concerned. But I also mentioned when the uh, in all these areas, when you have a good ERP working, one should also have some metrics and analytics around failures. Yeah, we tend to celebrate success but hide failures. So if we can create alerts on deviations, yeah, in our ERM process, they could be a good source of understanding. It becomes a valuable input for your at least your known risks in terms of management. So having a good deviation dashboard, uh, a good discussion, a good alert system, and importantly, a governance approach around looking at those alerts and deviations and seeing why is this happening could be a very good first step to the more strategic supply chain risk management I first spoke about. Okay. Now, once you have this kind of input coming from your real-time data and your data history, then I think the choice of whether you should integrate or not becomes again very contextual in because a lot of it is on the judgment of one or two or a few stakeholders, and it depends on their knowledge and their expertise. It may not be amenable to being put as part of ERP, okay, or an ERM solution. But the inputs to their process, if it comes from the ERP, that is very important for a good quality risk management approach. Have I made myself clear, Roland?
Yeah, thank you, Mr. Ramesh. I think that's a very good suggestion, having an ERP system and using that to leverage and integrate the rest of the risks, because most organization has a ERP system, and then your dashboard and all that, and using those tools. I think, yeah, that's a very good suggestion. Thank you so much, Mr. Ramesh.
Yeah. Like just to build on
Thank you,
this
Roland.
point, if there is a miss by a supplier, very few ERP systems force a person to write there why did this supplier miss happen, and if three times it has happened to the same supplier, there's no deviation dashboard which captures it, and hence many times it emerges as a risk for the business, which could well have been avoided if there was an alert or a dashboard which could have monitored it. So that's the simple point I was making.
Mr.
Hi, this
Mithane,
is
yeah,
Hi, this is
Abhay.
Abhay Dhanwate. Abhay Dhanwate. First of all, Mr. Ramesh, thank you very much for such a nice presentation. What I would like to add in this, do you agree that the supply chain management, risk management of the supply chain is highly risky and is unique to the industry? Because supply chain risk management of one industry of logistic is not comparable with the supply chain of any other manufacturing or any other transportation agency, you can say. So what I do you agree that every and the secondly the most important part of the supply chain risk management is that there is no broader framework available, unlike the banking sectors or the insurance sector where there are defined guidelines like Basel One, Basel Two, or even the individual regulatory agencies of each country have got their defined framework. But it is not available in case of supply chain risk management. So I think every industry has a unique feature of supply chain risk. So they need to jot it down all the risks associated end to end, and then appropriately they have to find out what are the mitigants available for it, or if mitigants are not available, in that case that risk has to be absorbed. So do you agree with this opinion, or do you have certain difference of opinion with this?
Now, but you're an expert in this area. I'm speaking on your behalf only, maybe. So I would not argue about what you said. Yes. And I think I did mention it earlier. There, risk management traditionally um, is easier in a data-rich environment where there is nothing where you make your transactions are not necessarily dependent on physical exchange, like banking has become today. The same banking 25 years ago or 30 years ago would have been less amenable to risk management the way it has evolved today, for obvious reasons, because a lot of the processes have got digitized. And that is generally happening. If you see today with e-commerce and all that happening, a large part of the of large business models are having data. I think where the gap is, unlike banking and financial services, where data is used effectively, other environments have not given enough attention to using the data available in their system. Okay, which is the point I was making even earlier to Roland's question. And over time, I think the maturity of businesses, companies who are becoming a little smarter, and and even if you look at the evolution of AI, one of the biggest applications of AI would be risk management, I believe, because you would at least 60-70% of the known risks can be well identified and understood if the data is used through a smart machine learning tool. So it is coming. It's just some industries like BFSI and insurance, etc., have become a little more, have moved faster, but others will catch up, I'm sure, because for all of them, the risk is not around the physical exchange itself. Rarely is very little of the risk is because the truck didn't come from X point to Y point. In fact, that is another change which has happened. It is all the back end underlying process of supplier failure or person failure or something, or quality failure, which is affecting it, and those can be managed through data surveillance and creating the right risk approach. I think so. Everyone will understand this. It's just that some of them have understood it faster because of they are more data rich. As the data intensity of all organizations is increasing, I think this will become the par for the course for many industries. That's my view. But there is a gap. I acknowledge there is a gap.
I think we can approach the various stakeholders and create a survey sort of thing to understand the risks that they are facing or the problems, unique problems that they are facing, and we can note it down and create a report based on that feedback. Maybe in future we can do that.
Yeah. Is there any other question? I know we are.
Mr. Miten, if you have any question, you can just ask.
Yes, yeah. Uh, Mr. Ramesh, thank you very much for a wonderful input and wonderful sharing of your own practical experience on that. My question is the first and foremost thing which happens in case of a supply chain or supply disruption is the immediate stress on the margins or the costing for a particular XYZ is it a project or is it a routine supply to the distributors or and to the consumers? How do we evaluate or how do we make effective matrix to plug in these immediate margin stress?
No, so Miten, this is a classical situation. Eh? We actually tend to think, we have to accept as a general rule that the cost of managing risk is more than the cost of meaning. When I say managing risk, cost of the risk which comes to our P&L or our business is much higher than the cost of managing it. So this is the learning all of us need to go back to our organizations is when does the margin get suffer, when there is a real vulnerability which the business is exposed to. Now, when that happens, the cost is insurmountable, and usually companies then tend to overreact. Okay, so in a conscious way, if we build a good, relevant risk management protocol of assessing the possible risks, just imagine how much competitive advantage that business can have if they have mitigated the risk, meaning even to the extent of 20-30%. If I have reduced the risk for my company compared to my competitor, the benefit is enormous. So I think the challenge is not in responding to it after the risk happens, because then the cost is very high. The smart company or individual is one who manages it and prevents it from happening, or has created a mechanism by which the impact on me is less than that of my competitor. Yeah, and that's how businesses win. If my cost is less than my competitor, I win. If my service is better than my competitor, I win. If my risk is better managed than my competitor, I win enormously. And I can give you live examples, meaning you just see a great example. I don't want to promote any one organization, but I'm speaking from experience and what I've heard. When e-commerce boom started with COVID, which company do you think, which e-commerce, it was not the big names or those big names which were known which benefited. It was not Jio, it was not Flipkart. Amazon did amazingly well because I'm sure they had had some processes inbuilt to know, instead of just saying e-commerce is going to happen, they also understood from their own personal experience of the past, they had something by which they could respond much faster than their competitors and more surely than their competitors. And hence, today, and they got a significant market share of the e-commerce market when it became, and they are still holding it. Yeah. So that's a way of creating long-term competitive advantage for your business by knowing when the risk happens. If you perform better than anyone else, that is the best day for you. It's like a cricketer who everybody can't score a century on every pitch, but the guy who scores the 50 when it matters is the one team which wins.
Right.
I hope I answered your question.
Yeah. Thank you.
I think managing risks in a better way from our competitors, which again would be a very vital thing for future, because that will the more resilient we are, it will help to manage the risk, and it will help to take the organization in.
Absolutely. I know we
I
are out of time. I'm fine
think
with going on,
out
but
of time, so we'll just close the session. So thanks a lot, Mr. Ramesh, for your interesting insights on based on experience, and uh, so I think our readers have enjoyed the session. And if maybe if you receive any questions, we will surely share with you. And we look forward to having more such sessions, and maybe more sort of surveys on this particular topic, and whatever we can come across. So thanks everyone. Thanks all the participants. Thanks, Mr. Ramesh. We'll come back with again. Maybe probably we'll be having a next topic around 3rd September. So we'll reach out to you. Thank you.
thank you. Thank you very much, Dr. Agarwal, and everyone else who took time off a precious Saturday evening. Huh? Thank you very
Thank you,
much.
Roland. Thank you, Mr. Abhay, Mr.
Thank you.
Gupta, Mr. Sharma.